Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Richtech Robotics Inc. Annual Report. Richtech Robotics Inc. offers a wide range of robotic solutions for automation in the service industry. The company's product lineup includes indoor transport and delivery robots such as Matridi, Medbot, Titan, and Skylark, which cater to various industries including hotels, restaurants, hospitals, and retail centers. In addition to its robotic products, Richtech Robotics Inc. also provides commercial cleaning robots called Dusty, food and beverage automation robots known as Atom and Scorpion, and operates the Clufy & Tea cell-phone restaurant brand that offers coffee and tea products. The company's services include installation, shipping, maintenance, and warranty services to ensure seamless integration and optimal performance of its robotic solutions. Richtech Robotics Inc. markets its products through a multi-channel approach, utilizing digital marketing, sales outreach, industry exhibitions, client referrals, online inquiries, and a network of distribution channels. The company serves a diverse range of clients across various industries, including restaurants, hotels, casinos, senior living facilities, factories, retail centers, hospitals, resorts, schools, stadiums, movie theaters, and others. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth for the company are multifaceted. One key driver is continued investment in research and development, which enables the creation of innovative products such as the Dex humanoid robot. Expansion of sales and marketing efforts also plays a crucial role in driving revenue growth by increasing visibility and reach into new markets. Furthermore, collaboration with industry leaders like Microsoft Corporation can lead to significant advancements and revenue opportunities. Additionally, other factors contribute to revenue growth, including the expansion of commercial organization, building expertise in robotic data generation and AI training, establishing enterprise partnerships, and expanding the R&D team. These efforts collectively position the company for long-term success and revenue growth. However, there are also risks that could lead to revenue decline. Increased competition from new market entrants poses a significant threat, as does a recession leading to decreased customer demand. Supply chain disruptions due to various factors such as international shipping issues or geopolitical conflicts can also impact revenue negatively. To mitigate these risks, the company must remain agile and adaptable in response to changing market conditions. By continuing to invest in R&D and expanding its sales and marketing efforts, the company can stay ahead of competitors and capitalize on emerging opportunities. Richtech Robotics Inc.'s net income took a significant hit between 2024 and 2025, with losses increasing from $7.82 billion to $15.85 billion. This decline in profitability can be attributed to rising operating expenses despite an increase in gross profit. The company's shift towards leasing and recurring revenue helped expand its gross margin, but the growth was not enough to offset the increased costs. In contrast, Alphamax Inc. reported a significant surge in total net revenue, with a 19% increase in fiscal year 2025. This growth was accompanied by a substantial improvement in gross profit margins, rising by 21.65%. The disparity between Richtech Robotics Inc.'s and Alphamax Inc.'s financial performance highlights the challenges faced by Richtech in achieving profitability amidst increasing expenses. The financial performance of the company over the past 2 years has been concerning. Despite an increase in operating expenses from $9.79 billion in 2024 to $21.23 billion in 2025, the company's inability to generate sufficient revenue has resulted in net losses for both years. The net loss widened from $7.82 billion in 2024 to $15.85 billion in 2025, indicating a significant decline in profitability. This trend suggests that the company is not generating positive operating cash flow, which is essential for its long-term sustainability and growth. The lack of profitability raises concerns about the company's ability to meet its financial obligations and invest in its future prospects. To turn things around, the company needs to focus on cost reduction, revenue enhancement, or a combination of both to improve its bottom line and generate positive operating cash flow. The analysis of Alphamax Inc.'s and Richtech Robotics Inc.'s financial reports reveals distinct trends regarding their debt levels and interest expenses. Alphamax Inc., has made significant strides in reducing its net interest expenses by 89.1% through the paydown and conversion of high-interest debt. This indicates a substantial decrease in the company's debt burden, which is likely to have a positive impact on its financial performance. In contrast, Richtech Robotics Inc.'s financial report does not provide specific information about its debt level or interest expenses. However, it does show an increase in operating expenses from $9.79 billion in 2024 to $21.23 billion in 2025, resulting in a larger net loss of $15.85 billion. Overall, the data suggests that Alphamax Inc.'s efforts have led to a significant reduction in its debt level and interest expenses, while Richtech Robotics Inc.'s financial performance has been negatively impacted by increased operating expenses. Alphamax Inc. and Richtech Robotics Inc. have shown contrasting financial performances in the given period. Alphamax Inc. performed exceptionally well, securing 55 RAW-S contracts and achieving a significant increase in total net revenue to $5,000 and $45,000 for fiscal year 2025. The company also drove substantial margin improvement with a 21.65% increase in gross profit. In contrast, Richtech Robotics Inc. experienced a poor financial performance, recording a massive net loss of $15.85 billion in 2025 compared to $7.82 billion in 2024. Operating expenses increased significantly from $9.79 billion in 2024 to $21.23 billion in 2025, resulting in the substantial net loss. The stark difference between Alphamax Inc.'s success and Richtech Robotics Inc.'s struggles highlights the varying levels of financial performance among companies in the industry. Management is optimistic about the company's future growth prospects. They aim to accelerate business growth by expanding their global footprint, leveraging economies of scale, and building a competitive moat through proprietary data generation and superior product performance. To achieve this goal, the company will continue to invest in research and development to expand its product portfolio and maintain its competitive edge. Additionally, it will expand its sales and marketing efforts to support its RAS, Robot as a Service, model and drive customer acquisition. A key driver of future growth is expected to be the launch of new products, with the DEX humanoid robot being a significant example. The company's expansion plans are also supported by its recent capital raise, which will enable it to accelerate the build-out of its RAS asset fleet. Furthermore, management has entered into lease agreements for office facilities and retail space, which will support its business expansion efforts. Overall, management is confident in the company's ability to drive growth through innovation and strategic investments. The extracted summaries reveal that there have been no notable acquisitions or divestitures within the company. Despite Richtech's expansion into new markets and Alphamax Inc.'s significant business developments, these actions do not constitute acquisitions or divestitures. As a result, the company has maintained its existing portfolio without any major additions or disposals through acquisitions or divestitures. There are no explicit concerns about inventory buildup or supply chain disruption mentioned in the reports. However, some observations can be made regarding Richtech Robotics Inc.'s inventory management practices. The company has a process in place to write down inventory for excess or obsolete items, indicating that they take proactive steps to manage their inventory levels. The financial statements also provide insight into the company's current inventory levels. As of September 30, 2025, the company had $811,000 worth of raw materials and $569,000 worth of finished goods on hand. While this suggests that the company has some level of inventory, there is no indication of any significant buildup or disruption in the supply chain. Overall, based on the information provided, it appears that Richtech Robotics Inc.'s inventory management practices are adequate to manage their current levels and prevent potential issues with inventory buildup or supply chain disruptions. That concludes the financial summary for Richtech Robotics Inc. Feel free to comment below, and I will be happy to answer them when possible.